It'll just definitely help you guys. Okay, so that now it is recording. So that is good. So yeah, those were all the results during the week. So definitely have a look at the Discord chat, because that's where a lot of people are sharing the results that they are getting with this. I'm also sharing my results, as I just mentioned, and we're going to keep doing that over this week. Okay, so I wanted to just cover today how the strategy actually functions. So I'm just going to set up a new chart. And I want to discuss the signal chart. Okay, so I'm just going to go in, start again with this. So I'm going to just remove this. So if you set up a new chart and you select like a 200 to with 10 days loaded, break at end of day on, you're going to get the analytical bar. So this is going to be a flat baseline chart. So when I originally set up the strategy, it was basically programmed for like a flat baseline chart or a trending baseline chart. So I've popped on an indicator here too, which is called the ticks above below baseline. So that's in the list there. And I've put a value of 202. So you got to put the size of the wick and the size of the baseline together. So when the price moves 202 ticks in any direction, it's going to form a new baseline like it did there. Now I'm running playback at the moment on speed, just so we can review this clearly. I just want to slow it down a little bit. Okay, so like on playback at the moment, whatever the date this was, 10th of February. So the signal chart, which we're going to load now, I'm going to load it all on one chart just to make it look helpful. So if I go to data series and I select again the same contract, and this time I'm going to select a 2020 analytical bars, because this is what we've been using on the as the back end signal chart for the strategies. And I'm just going to cover the flat baseline first, but then I'll show you how that reverts to the 5-minute chart. So if you look at this, you'll see that this is the 2020 chart. You'll see some gaps over here. So as soon as you see gaps, that means the price was basically running the baseline. And all these wicks that you are seeing, so this long wick over here, so you'll see, this wick that we're seeing over here. Oh, come on. This wick that you're seeing over here, this big wick, is basically all of this data over here from where the price left the baseline. You see there's a gap on top. So the price was forming a wick. So all of this data over here, all of these tick charts is basically this one bar over here. And that is what the price did in between those two baselines. So whenever you see gaps in the price, you'll see that that is an area of where the price is running on that specific wick. So again, this wick over here, this wick over there is basically all of this data from here to here. So that is what the price was doing while this wick was in place. Now, if I remove all these drawing objects and I click on the bottom data series, and I'm just going to drag this to the top. Okay, so now you'll see it all on one chart. You'll see the baseline. Okay, so we'll go to the current baseline. So there's the baseline. This is what the price has been doing while this wick is forming. So the last wick you're going to see is the current height of that baseline or that wick, the current height of that wick. And this is all the price action in between, since that price has left the baseline and the wick forming. So now if we go and load up and the indicator on there, which is the signal chart. So we're going to go load up the shadow trading divergence indicator, because this is the indicator that's built into the strategy as a signal chart. So if I go to DTB shadow trading divergence. Okay. And I go template load, and you'll notice that all the strategies have a default signal chart template built in, which is a 2020 with +2 to 5, negative -2 to -5 with 10 exits. So if I go and load that up, I go load up that shadow trading divergence indicator, and I make sure that I attach it to the input series, which is the 2020 analytical. And then I click on apply and okay. Right. So this is, so if you're running this strategy on a flat baseline chart like this, what this is doing is it's trading the price back towards the baseline. So this is not the reverse strategy. This is the back to baseline, or the standard Medina wick trader strategy. So when the price is trading like this, it's going to take positions when the bars are green, trading them upwards. So that is what the idea. I just want to get this alt and plus, make these bars a little bit smaller. What's going on here? There we go. So what's going to happen is when the price, so we'll quickly look at the indicator. So we'll look at the indicator very quickly at the coloring. So the shadow trading divergence, when the bars are, we'll look at green first. When the bars are green, that means that the price is between -2, or it's between -5 and -2. So if you look at because it's below the baseline, it's minus. So between -2 and -5, the bars are going to be green. So that is the area where the strategy is going to try enter positions to trade back towards the baseline. When the color of the bars are orchid, which is +2 to +5, they're going to be, in that range. So you'll see that on the left here, the bars were green. They were in -2 to -5 range. When they went to orchid, they're in the +2 to +5 range. So it will not be trading. It won't be trading any short positions when it's below the baseline, because it's actually trading back towards the baseline. So that's the coloring of the bars. And whenever you have a white line that shows a vertical white line on the chart, that is going to be the area where the trades will exit if they hit to that -10 or +10. So that's when, those will exit. So that's just a refresher on that. So when the price is trading below the baseline, it's going to be looking for long positions back towards that baseline. Now, on this occasion, the baseline actually broke. Doesn't mean that a lot of these positions wouldn't have been successful. It's just if there were any trades left at the end here, they would have hit a stop loss. So over here too, there was a new baseline. So the strategy is looking to sell when the price is above the baseline and the bars are this orchid color. It's not going to trade when the bars are cyan, and it's not going to trade when the bars are green because the price is below the baseline. So it's only when it gets to these orchid colors will it be entering short positions back towards the current baseline that the price is on. And if any trades were open, they'll exit on the solid white line. So the reason why I'm showing you guys this is because, we are looking for that range of where price is trading on that, on this indicator, so that you can better understand it when you're applying it to different bar charts. So if you go into the indicator settings and you, for example, want to adjust the range of those, of where the trades are taken, these are the numbers where the numbers get adjusted. So you can say you want to enter between 4 and 8. And -4 and -8. So that's going to adjust the coloring. It's going to keep the coloring of the bars, but it's just going to change those various settings that are in play. So I change that, and there we go. So magenta, or that orchid color, it'll be selling, and green, it will be buying. So green, entering positions back to the baseline. Green, orchid, not. So this is when you're trying to find that range of where settings, where you want to get settings to work on, when you're trading this, this is what you basically look at to get an indication of, where those trades, where the strategy is looking to enter positions. And that's without even going into the strategy settings, where you can set your minimum distance and your maximum distance on this long wick to enter positions. So, as an example, some people might say, as your minimum distance, that's why the strategy's got a setting as a minimum distance. You might say only start entering positions when the wick is 160 ticks high, and then trade it back down to the wick. And if they fail, they'll just go break to a new baseline. So that's why there's a minimum distance and a maximum distance. So you can enter a very specific range on this wick to enter positions. Over here, you'll see these bars are green. So this is when the strategy will be going long to trade back to that baseline. So that's, when you're looking at a chart like this, that is where you are identifying where those trades can actually happen. And also, it also depends on the retracement that you're using. But just as a good indication, the signal chart, that's how it actually works on this. Now, what we've done now is we've actually added on the Medina squeeze strategy, we have made the back end indicator as an option to be a 5-minute chart. So instead of having a 2020, this can be any minute chart. So not just 5 minute, it can be a 1 minute, it could be a 5 minute, but just for interest sakes, we'll put a 5. So the exact same thing will happen over here is you've actually got a 5-minute chart, and you've also got your main data series as a 5-minute. So in this case, we only really need to have the one data series on the chart, but I'll still just put it on there. So right now, actually, it makes sense just to remove it completely. So I'm going to remove this top one, apply, and okay. So when you are running the Medina Wick Trader squeeze strategy, you have the option in there to select a 5-minute data series, or any, like I said, any data series. So under the filter where it says signal chart combo 4, you can use a signal chart. As I mentioned, the default settings in there for that template are in there. But if you want to use the minute bars, you can select that. So you're selecting both of these, and then you're choosing which minute you are looking at. So because we've been using a lot of 5-minute charts, I've just made the signal chart as a 5-minute. Okay, so the exact same thing will happen there. So when the bars are magenta, or this orchid color, they'll be looking for short positions, like retracement short positions. So that is how that will work. So I'll add the strategy on here, because that will just show the full look of it. So template, load, and the squeeze with the 5-minute chart. Okay, so we're using that 5-minute data series in there, and we're applying that. So when the criteria of the strategy have been fulfilled, which is obviously the minimum distance, the maximum distance that the price is going to be going within. So we've got a retracement value also. So how far the price retraces before it enters a position, the minimum distance from baseline to enter position. So whenever you see the word baseline, that is the beginning of the candle. So it's very easy to see that baseline on a chart where you've got a flat baseline and a trending baseline, because it's very clear to see, because you've actually got a physical baseline of price, and the price is above and below. But when you're looking at a 5-minute chart, every single new candle is basically forming a new baseline. So when you're going into your strategy settings and you are selecting your minimum distance and your maximum distance from the price, I was busy calculating. I shouldn't have ticked on the damn thing. Another warning, don't click on anything when it's calculating. Just give it a few minutes to reset. Just so that all the back end stuff can be loaded on the chart. It'll just take a lot longer now, which I might not want to wait. So I'll explain it anyway. So, you know, each new candle is its own baseline. So when you've programmed and you've got the 5-minute chart as the signal chart, you know that when the bars are this orchid color, it'll be looking for short positions. And when the bars are this green color, it'll be looking for long positions. And if you've got that +10 and -10 setting, if there's any long or short positions, they will exit at that time. So, you know, hopefully you'll have some retracement, enter position, target, and then the price will move on past that zone of entry that you're looking for between that specific area that you're working in, which is, you know, +2 and, or in this case, it was, you know, between 4 and 8 and between -4 and -8. So that is the area of where those bars will change color. So when you have the strategy loaded, you'll be able to see exactly based on the coloring of the bars when positions are likely to be entering and based on those retracements. So, you know, it's good to experiment a bit with different settings in your signal chart, because that is going to filter out when the strategy is taking positions. And then you can also narrow down completely or expand the range of where those trades are entering. And you'll quickly see that by the coloring of those bars. I just want to disconnect over here. You see, I had to disconnect the damn data feed for this thing to pop up. Stupid bitch. Okay, yeah. So there's all your settings in there. Okay, so any questions on that? I know it was a bit of a run through of that, but I think it's a good idea just to get just to remember what that signal chart is. So when you're using that signal chart on your strategy, you know exactly, you know, what that signal is basically. Let me just connect again to this feed. You know what those coloring of those bars actually mean, and you know where the strategies are entering position. So if you're having fewer trades, then you might want to expand that range. If you're having too many trades and maybe having a few losing positions, you might want to adjust that range. And yeah, and that's basically how you do it. So you can have another chart open. So wherever you have your strategy running, you can have another chart open on a 5-minute chart, and you can choose, or you can go and look at this range and work around with it. So, you know, you might even decide between, you know, 1 and 3. So the cool thing about this is literally going to adjust immediately, you know, when you adjust these colors. So magenta, or that orchid color, it'll be looking for short positions. The green will be looking for long positions. Now that is a little bit more, you know, it's a lot more filtered. So all these cyan bars that you're seeing, there will be no positions in that zone because it's gone beyond that. So at the bottom, you'll see it says, you know, between 3 and 1. So 3 as a high and 1 as a low, and at the bottom -1, -3. So as a -1 beginning and to a +3. So this bar over here, as an example, this green bar, it went as high as plus, oh, So it was high as low as -3 and as high as -1. And then the next bar went above that range. You see, it went above that range. So this is how you identify, where these trades are entering. And any time where these bars are like running up, often when you have the bars running up, you don't actually want to be trading short positions in the scenario, because it goes beyond that range that you selected. So it's basically filtering positions out within that squeeze environment where there's not much movement in the price, and you're entering in that area. So if I go and activate this and I choose this as a 5 minute, and I go, so because I've got this, if I want to use the signal chart at the bottom here, I've got between 1 and 3, -1 and -3. So I can go between 1 and 3 and -1, -3. And also, you can choose where positions exit. So you can say, well, if it goes to +6, you want to exit that position, then you'll have much shorter losing positions. But I'll leave that as that right now. And then we'll just see how the strategy will look on this chart. I've got a few chat messages. Sorry, Medhat, I didn't read that. Can you try 4-8-12 or 5-7-13? See what it looks like. Okay. Looks for extreme prices. Yes. Perfect. Okay. So between 4-8 and 12, 5-7-13. So we can definitely do that. I'll just let this finish calculating. So again, so with the Bollinger, I haven't added the 5 minute signal chart into the Bollinger strategy yet, but that is something that I'm going to do during this week. I just haven't had time to actually do that. So the good thing is you'll be able to use the Bollinger strategy also on extremes and trade when that price is completely up or above and below. So it's completely at those extremes. And in that way, you're getting the most likely or the highest probability entries. I've got quite a few days loaded on this chart, so I might just let this run a bit. Just give it a sec to load up. So, it's good to have, like I said, another chart open where you have these settings, and then you can see based on your Keltner squeeze, your channel, and you've got your Bollinger Band, you can see, wow, okay. And the cool thing is too, is you can look back on your chart. So the moment that this bar closes, if it closed in that zone of that plus and minus value, it will stay that color. So you can actually backtrack and look on your chart and look at exactly where those trades have entered and also would have entered if it wasn't active before. And you can really identify that squeeze zone or that extremity zone of where trades are entering. Okay, so let me just pop this indicator on again. So 1 second. So if I go to like a minute, so between 4 and 8, so that's another option you can do. You can say you only want to have so shadow trade divergence between 4 and 8 and -4 and -8. And then exiting at, like 12. So there's the 12, you can add, that's the extremities. So, that's how that looks. And, getting the strategy on there. Just going to reactivate this. I just want to go to the data series here and just load, 1 day on there, because that makes a big difference. And then reconnect to this connection that I have. Actually, let's connect to the kinetic feed rather. I'll just disconnect from that and just connect to live data, which is better to work with. And that way we can see it in real time at up to current price. Okay, so again, if on a Sunday night, if you're loading up your chart, you can load 2 days because there's not quite enough data to deal with. You need a bit of Friday. You need Friday's data as well to actually fill up the chart. Okay, so there we go. So there's your indicator settings, and that was between the +4 and +8, as we did over there with exit on 12, and we can just add the strategy on here, which is the squeeze. And we've put those settings in there already. Okay, we have just got to adjust it again. So between 4 and 8, exit on 12, -4, -8, exit on -12. So that is programming that signal chart into that. And I'll just pop it on there, apply, and okay. So give that a second to load up. Now, the strategy itself, it doesn't load up the indicator on the chart when you load up the strategy. But if you want to see where the strategy is going to be entering positions, you can load up the indicator separately. And in that way, you can actually see, based on the coloring of the bars, where everything is. Just give us a moment to load up. Okay, so we've got the trade. Also, the trade support, that's not actually in, it's programmed in the strategy, but it's just not showing on the chart. If you want to load and see that separately, you can actually add that into it as well. Another small little mod that I did is if you select a target, your daily target, and you don't select a daily stop, it'll only show your daily target on the top of the chart. If you don't select either, it won't show the stop and target. So that's it just shows you where, what you have selected. So it's just a little cosmetic thing, actually. So if you untick any of these boxes or only use one of these boxes, that it'll adjust this on top here. So before, if you had none of these selected, it still showed those values, but it's just better if you know what you have selected by looking at, the top over there in your strategy. I also want to get some sort of a little box or something that says, actually the signal chart is already there and I don't need to add anything more. So that's fine. Okay, there we go. So here is your squeeze. Here's your squeeze. So it's only going to enter short positions when the bars are this orchid color, but it's also only going to enter short positions if the Keltner channel and the Bollinger Bands, or the Bollinger Bands, are within the Keltner channel. So you're not going to have any short positions over here. So there'll be no losing positions there. Here's the green. So a bit touch and go over here. It's very close. The bands are outside the channel. So this might be a little bit too filtered out, but you'll definitely have fewer trades in this situation, but you're going to have very successful positions, but definitely a lot fewer trades. I could see none of these. I don't see any positions taking. Perhaps over here. Yeah, so I would say, based on those settings, you're looking at the Bollinger Band. It's only come within the squeeze has only happened over there. So we would have had sell positions on this candle, and then they would have hit their targets, but then no more positions because the band went out. Over here, no positions. So this is like really, really filtered out. So again, if you want to go and on another chart, go and look at your shadow trading divergence settings, you can definitely, again, modify these. So you can choose, let's just go between 1 and 1 and 3 as an example. This is go between 1 and 3 and exit at 6. I just want to see what this will look like. Okay, so here we go. So 1 and 3, exit at 6. So you are going to have long positions over here. You're going to have short positions over here. So you're definitely going to have short positions over here. And you are not going to have any long positions over here or any short positions over here because the bars are cyan, but you will have short positions over here because so not over there, sorry, because look, the band has gone outside of the Keltner. So remember the bands have to be within the Keltner for it to enter position. So you'll have short positions over here also. So a little bouncing around positions. And if any of those short positions are open, it'll exit on this white solid line. So it's a cool thing to do is just look back on your chart and you can see where positions would enter. Like you would have a few, but you would have positions over here also. Yeah, so they definitely are few and far between. You will have positions over here also. These will be short positions. And so on and so forth. So it's definitely worth looking at that. Okay, exit needs to be 8 to 12, leave it at 5. Yeah, good. It's fine. So I mean, it's good just to look at this anyway. I mean, you know, just have a look at a few different options. But if you're having fantastic results, which you guys are, you know, you guys are killing it already. You know, with the strategies, you're absolutely killing it with your results. Does anybody want to share what they've been doing this week and what has worked for them? Also what may not have worked. Don't only share the good stuff. If anything has like not worked at all, just also share. That'll be great. Who do we have? I think everybody's shy.
Yeah. No, Jason, yeah, as I was saying to you before the Zoom, I'll say it for everyone else. The TTM squeeze with the trade support I've been finding has been extremely powerful. The trade support has helped filter out those moves where it falls off the cliff. And if you combine the two together, it actually is very, very, very smart. Very good.
Perfect. So
I have posted stuff on the Discord. I haven't posted everything I've found, but largely very high percentage success at this stage.
Great. So you weren't using the signal chart, so you had
these. I wasn't. I will play around with it now that you've made it the 5-minute one as well. I will give it a go. But at this stage, getting some very good success with the TTM squeeze and the trade support. I'll play around with the Bollinger as well.
Okay.
I haven't played around with that one much. TTM is more what I was doing before, just having to eyeball it there. Perfect.
And then, you know, like you said, you've added the trade support. So the trade support is a really good thing. You know, even if you just want to use the trade support, if the signal chart, you know, seems to be a little bit more complicated and, you know, you struggle to really, you know, grasp the idea of having that signal chart built in, even just the trade support is a really, really good filter to use to filter out, you know, positions that will ultimately lead to a loss because the trade support has switched over. So I'll pop the trade support on there. So there we go. So as soon as the price starts trending up and it breaks through that trade support at this section over here, so all these bars going up, none of those bars will be short positions because the strategy is only going to look for long positions when the trade support is below the price. So that really helps when you have a long trending market. You don't want to be taking long positions, even though a lot of these long positions would actually have worked, you know, taking, you know, I mean, because they're obviously it's filtered out because the, you know, the bands are out, but you're definitely going to find that if you can keep an overall trend keep to the overall trend, you're going to be a lot more safe than just relying on, you know, what's happening. Obviously, when the price is bouncing around, those are really good times. But generally, you're going to have periods of a long running. I haven't got much data on this chart, unfortunately, but that's definitely going to be evident, you know, over a period of time where you're going to see, you know, these long trending running positions. And you don't really want to have short positions against the trend. So it's a really cool thing. Okay.
Actually, Jason, sorry, just one more question. Do you by chance, is the combo 4 chart also attached to the reverse? Medina Wick reverse?
It is. It is. And that is fantastic.
Okay,
now,
because I think Medat just gave me an idea. Sorry, Medat, I'm going to run with this one.
Yes.
Jason, I'll have to get back to you.
Yes, perfect.
Because
so,
you know I'm working on the reverse as well.
Yes, absolutely. So what I found, especially on like this over here, so if I go and load the, first of all, the data series, I'll take it off. So I'm going to just take off the 2020 on here. Okay. And I'm going to pop on the indicator, which is the shadow trading divergence. So the reverse strategy has exactly the same functionality as the current strategy has for the back to baseline, but the shadow trading divergence, you can choose a specific zone. So I'm going to go template load, and I'm going to choose for the reverse. So you'll see I've got some templates in here for reverse, where it's only going to take trades between 15 and 20, you know, so, and 7 and 10. So if I load that up, I'll just load up to 7 and 10. I've just got to change the coloring here. Red, cyan. Okay. So basically, this is going to be trading the coloring is not very good on this. I've got to adjust the templates, but exceptionally good, especially if you are going for a trending baseline. So if you're going for a 2,200 or a 2,195, that is definitely going to, this indicator is definitely going to help you get into those positions trading that reverse, because when that gets to minus, you see it's minus 15. So it will take reverse positions when that gets to a minus value. So if you look at the bottom of the chart, you can see all the times where this baseline breaks, it goes right up to plus 17. You know, it goes right up to plus 17, all the way from plus 10 to plus 17. So if you only enter trades when it's plus 10, you know, you're going to get a lot of these baseline breaks. And I think I covered this reverse strategy on a call before, but as you can see that, you know, it definitely goes over those values. And every time that baseline breaks, it goes over those values. Okay, maybe not every single time. Like this one here, it kind of went below, but that was a quick baseline break in succession. But generally, it's always going to go out of those values beyond 10. So even if you're taking trades between 12 and 17, every single baseline break, you're going to have, you know, trades over here in this area. And the cool thing too is you can set a minimum distance. So you can say, I only want to enter trades when the price has passed 150 ticks. Okay, so I only want to enter, you know, on the wick where it's past 150 ticks, but the indicator must also be plus 15 to 17. And then what will happen is every time it gets here, it will enter reverse trades in the direction of the baseline break. And then you set your target, whether it's 20 ticks or 30 ticks. And then, you know, you'll find that every time a baseline breaks, you've actually got very profitable trades every time. The only time where you won't have profitable trades is when you have a very, very long wick like this one over here that went to plus 15, plus 16, and then, you know, went back to the baseline. So again, over here, you know, if you've had, if you've had your distance marker as, we'll just use 100, we'll use 150 ticks. We'll use 150 ticks as an example. So if you've got your weight your weight trades, like only enter positions when the price has gone past 150 ticks. And when the indicator is plus 15 to 17, you can have positions in this area here. And I'm just going to show this because this will be losing positions. So you'll have trades entering here predicting a baseline break, but the price actually went back up to the baseline. Now, the cool thing too is you can say, okay, if the price comes back within the baseline, you want to set your fixed target or your fixed stop at, this level here. So let's measure that as an example. So you can say exit at 105 ticks or 110. So only enter when it passes 150. But if it does, by some chance, return back to the baseline, exit a position there. So you haven't got very long running losing positions. So, these minimum markers, these maximum markers, and these targets and stops are so powerful to use. And, it does take a little bit of knowledge about it. And that's why I've produced quite an extensive document on the Medina Wick Trader as well as the reverse. But on the reverse, you've got an exact target on the wick. So you can, and an exact stop on the wick. So when you see 195, that means when the wick hits 195 ticks from the beginning of the wick, it will exit. And if the price retraces and hits 140 ticks from the beginning of that wick, it will exit. So the same principle as I put over there, that's 104. So that's the value that you adjust in there. So that's when you got to use this exact stop. So the cool thing is you can use an exact stop on the wick, okay, but you can use an individual target. So you can say every single trade must have a 40 target, but if the wick gets to retraces back to 140 ticks from the baseline, then it must exit any open position. So you can have long running positions. So the cool thing about this too is you can enter positions, and I'll move it to this one over here. I'll just move to a new one actually. And I won't be long on this, I promise. It'll just be a quick one. So again, you've got your minimum. I'll just put your minimum distance, and you got your maximum distance. So you can say your minimum, your maximum distance of where trades enter, and you've got your stop over here. So what will happen is trades will enter within this zone, your minimum and maximum distance. Your exact stop will be this line here, but your individual stops and targets could be, I don't know, let's say 130 ticks, 139 ticks. So you can say my trades must have 139 target, and then they'll exit over there. So small stop, and then a bit of a running position. So that's how this is where you modify the settings in the strategy. And, I ran this reverse strategy for quite a long while, and I actually love it because those baselines are breaking all day, every day. And once you just master this little setup here, of choosing your very fixed stop, and then, choosing your running target, you can even make it 100 ticks. When those baseline break and the price runs, it's going to be awesome. Okay, another question. I agree. Combo filter. Yeah, so the combo does filter a lot. Trade support definitely keeps in the right direction. Is the sequence, if enabled, still requiring clicking disable filter? Yeah, unfortunately it is. So I try to get this right. For some goddamn reason, I couldn't work out. I was up until 11:30. I was up until midnight last night at my office, trying to get that feature working. But unfortunately, you still got to activate the strategy. And if you are not using any filters, sorry, reverse, wrong one. If you're not using any filters on your strategy, then, obviously you got to untick the trade support and untick the combo chart 4. Okay. And then, once that starts, oh crap, I shouldn't have done that. Let's too much data over here. But once you do that, you just have to click on the disable all filters and click on the start. Sometimes I've noticed that if you click on the start, it doesn't quite work. You're going to click on the pause first. So I'll bring up my VPS, which is just over here. It's off. So sometimes you've got to click on the pause first and then the start, and then it works. So, you know, just always make sure that your start button is green and your pause button is gray. Then you know you're live and active. And again, if you want to use the disable all filters, if you've had the trade support on, you've got to just refresh the chart. So then you have the disable all filters and your start button green. Cool. So that should answer that.
Hey, this is Medhat. There's a couple of comments on the reverse.
Yes.
If you're going to have the long wicks, I think this is for Paul. If you're going to have the long wicks, which means you're only trading in the reverse on the long wicks, you can only do it the way Jason outlined, which is you have to have a runner. You have to have a pretty large target. Otherwise, if you want the typical hits back to baseline, you know, you're in for 20 ticks and or you're retracing and you're in 5 positions, you actually have to choose a much smaller baseline for the reverse. So instead of 200, it have to be something smaller. So you're entering closer to the end of the wick on the break, and then it would break again and you break again, because effectively you're only taking trades on the breaks, which if you look at that very long trending baseline, you're not going to have a lot of trades there. So just keep that in mind if you really want to try it.
Yeah, perfect.
Sorry,
please carry on, Paul. Yeah.
Yeah, I was actually looking at something like a reverse squeeze. So when the price is out of the Keltner channel and it's pushing the Bollinger way out, to actually look at enabling the reverse Medina Wick reverse strategy. But you gave me an idea with the signal chart 4 settings, that if you rather use what Jason was saying, but you want to trade those cyan wicks, I just want to see if something like that would work, but on a 5-minute chart, not on a
sure
2x200 or something like that. Just playing with the idea. I tried it on playback and it was working, but as a lot of manually starting, pausing, playing, starting, pausing. It was a bit of a handful, but just want to see if there's another way. Yeah,
you can definitely try that. Sorry, Jason, we're having a sidebar here.
It's fine.
If you want to use the DTB bars and you want to trade the reverse, you might want to try something like, you know, a 250 or a 275 on NQ, 225 on ES, stuff like that. The reason I even suggested the 5-minute bars a while back is because you're constantly in these open close candles that are red and green, which is what Jason said at the beginning of the call. You're basically forming a brand new baseline with every one of those candles. So effectively, you can try it out on a 5-minute, but what you'll notice is you're simply just taking a trade in the opposite direction, and then you'll be out with profit or loss a few candles later. So to me, when I experimented with this, reverse or trending baseline didn't really matter that much on the 5-minute chart, because you might enter on a green candle going long, and then a few candles later, you're exiting at a loss or hit the target. And if you use a trending baseline, you'll be taking a short position on a green candle, and then you'll still be exiting a couple of candles later. So the 5-minute bar, the 5-minute candles will actually neutralize the differences between the reverse and a trending baseline. Just play with it. I think you'll get the hang of it once you try them.
Yeah, thanks, man. Thank you.
Perfect. But I can also definitely see what you mean. So like this, as an example, on the 5-minute chart is between 8 and 12. So these bars here are only forming when the divergence goes to -8 to -12. So if you want to enter reverse trades, like you're saying, those will be reverse trades. So all the bars that are cyan will be reverse trades because they're outside that range. So that'll be a reverse trade also, you see, reverse trade. So yeah, it's definitely, there's definitely less trade. So you can even slightly adjust those settings, but I'm definitely happy to create a reverse Keltner squeeze, like you say, for this. And then you got the ability to be able to choose like you might even go between 7 and 12. That might open it a little bit. 7 and 12, you're going to have, yeah, still those same opportunities where that price ran out. But yeah, definitely something to look into. You'll have much fewer trades, but those will be such high-end probability ones because they are right on the edge of that. So definitely worth the look.
Hey, Paul, one more thing to think about when you're using these strategies on a 5-minute bar. You know, by design, they are supposed to be mean reversion. When you're using reverse on a 5-minute candle, you're actually with the trend, not opposite of the trend.
Yeah, I'm trying to do an intelligent misuse of the strategy is what I'm after. If such a thing exists.
Always does.
There we go. So like there, as a perfect example there, you know, we got that exact same thing in play where you've got the coloring of those bars that change on, oh, fuck off, NinjaTrader. So obviously all these gray bars, no trades, but every time you have these cyan bars, you'll have, you know, those reverse trades. So that's, yeah, definitely something to look at. Again, you know, you'll definitely filter out a lot of those trades, which is fine to do. But, you know, you only need 5 or 6 or 7 trades a day. And if you can get 100% accuracy on all of those, you definitely sorted, eh? Okay, perfect. I will leave it at that. If there's anything else you want to know, you can just pop in questions and whatever, and we will jump on that. I'm running the Bollinger strategy this week. I'm not 100% sure on the template for the squeeze because I've added the 5-minute shot. I'm not sure how, but yeah, please give us feedback on that during the week. Keep doing what you were doing. You know, whatever you were using last week that you had amazing success on, just make sure you kept a record of your settings that you used and keep going with that. Okay, cool. Thanks, guys. Have a good day further, a good week, and please keep posting your results. I'm very happy. I'm very excited about what we have in store here, and I look forward to what we can produce.
Excellent presentation, Jason. Thank you so much.
It's a pleasure. Thank you. Thank you, Eduardo. Have a good one. Okay.
Thanks, Jason.
Cheers.
Cheers, guys.
Bye-bye.